Best stocks to buy for high yields in 2024. Welcome to our channel. Today, we're diving into an exciting topic that's on the minds of many investors: the best stocks to buy for high yields in 2024. Identifying lucrative opportunities is more crucial than ever. In this video, we'll explore a curated list of high-yield stocks that not only promise attractive dividends but also show potential for growth in the coming year. We'll break down key sectors to watch, highlight companies with strong fundamentals, and discuss market trends that could impact your investment decisions. Whether you're a seasoned investor or just starting out, our goal is to equip you with the knowledge you need to make informed choices. But why focus on high-yield stocks? Well, they can provide a steady income stream, especially in uncertain economic times. Imagine earning passive income while your investments appreciate. Sounds appealing, right? So, if you're ready to discover which stocks could boost your portfolio and help you achieve your financial goals in 2024, stick around. We promise to keep it engaging and informative, ensuring you walk away with valuable insights. Let's get started on this journey to uncover the best high-yield stocks for the upcoming year. Understanding high-yield stocks. High-yield stocks are shares of companies that offer dividends significantly higher than the average market rate. These stocks are often found in established companies with stable cash flows, making them attractive to investors seeking income generation. In an investment portfolio, high-yield stocks can provide a reliable source of passive income, which is particularly appealing during times of market volatility or economic uncertainty. One of the primary benefits of investing in high-yield stocks is the potential for consistent income. Dividends can be reinvested to purchase more shares, compounding your returns over time. This income can also serve as a cushion against market downturns, allowing investors to weather financial storms more comfortably. Additionally, many high-yield stocks belong to sectors like utilities or consumer staples, which tend to be less sensitive to economic cycles, further enhancing their appeal. However, it's essential to approach high-yield stocks with a balanced perspective. While they can offer attractive returns, they also come with risks. Companies that pay high dividends may do so at the expense of reinvesting in their growth, potentially leading to stagnation. Moreover, a high yield can sometimes indicate underlying financial troubles, as a plummeting stock price can inflate the yield percentage. Therefore, thorough research and due diligence are crucial when considering high-yield stocks for your investment strategy. Market trends for 2024. As we look ahead to 2024, several market trends are shaping the landscape for high-yield stocks. One key factor to consider is the current economic indicators, such as GDP growth and employment rates, which suggest potential growth in specific sectors. For instance, sectors like technology and renewable energy are poised for expansion, driven by innovation and increasing demand for sustainable solutions. Companies within these industries may offer attractive dividends as they capitalize on growth opportunities. Interest rates also play a crucial role in influencing stock performance. With central banks adjusting rates to combat inflation, the cost of borrowing can impact corporate profits and, subsequently, dividend payouts. If interest rates remain stable or decline, it could create a favorable environment for high-yield stocks, as investors may seek out these equities for better returns compared to fixed-income investments. Conversely, rising rates could pressure high-yield stocks, making it essential for investors to monitor these changes closely. Additionally, emerging industries such as biotechnology and electric vehicles are gaining traction and may present high-yield opportunities. Companies in these sectors are not only innovating but also establishing themselves as leaders, which can lead to robust dividend growth. By keeping an eye on these market trends and sectors, investors can position themselves to capitalize on high-yield stocks that align with the evolving economic landscape in 2024. Top high-yield stocks to consider. As we explore promising high-yield stocks for 2024, here's a curated list that stands out based on market analysis and potential for growth. 1. AT&T Inc. Yield, approximately 6.5%. AT&T has long been a favorite among income investors due to its robust dividend history. With a strong foothold in telecommunications and ongoing investments in 5G technology, AT&T is well positioned for future growth. The company's commitment to maintaining its dividend, even during challenging times, makes it a reliable choice. 2. Altria Group, Inc. Yield, approximately 8.0%. Altria, a leader in the tobacco industry, offers one of the highest yields on the market. Despite regulatory challenges, the company is diversifying into reduced-risk products, which could stabilize its revenue streams. This adaptability, combined with its strong cash flow, supports its generous dividend. 3. Realty Income Corporation. Yield, approximately 4.5%. Known as the monthly dividend company, Realty Income focuses on commercial real estate investments. Its diversified portfolio and monthly dividend payments make it an attractive option for income-seeking investors. The company's strong track record of dividend growth further solidifies its appeal. While these stocks show promise, it's crucial to conduct your own research before investing. Analyze each company's fundamentals, market conditions, and your own financial goals to make informed decisions. Happy investing! Investment strategies for high-yield stocks. Investing in high-yield stocks can be a rewarding strategy, but it's essential to approach it with a well-thought-out plan. One of the most critical aspects of building a high-yield stock portfolio is diversification. By spreading your investments across various sectors, such as utilities, real estate, and consumer goods, you can mitigate risks associated with market fluctuations. This way, if one sector underperforms, others may compensate, helping to stabilize your overall returns. Timing your investments is another key strategy. While it's impossible to predict market movements with certainty, keeping an eye on economic indicators and market trends can help you identify opportune moments to buy. For instance, consider investing during market dips or when a company announces a dividend increase, as these can signal potential growth. Additionally, dollar-cost averaging, investing a fixed amount regularly, can help smooth out the effects of market volatility. Lastly, it's crucial to assess your risk tolerance when selecting high-yield stocks. High yields can sometimes indicate underlying risks, so understanding your comfort level with potential losses is vital. If you prefer stability, consider stocks with a history of consistent dividends. Conversely, if you're open to higher risk for potentially greater rewards, you might explore emerging industries with higher yields. By implementing these strategies, you can create a balanced and effective high-yield stock portfolio tailored to your investment goals. Happy investing! Monitoring your investments. Effectively monitoring and managing your high-yield stock investments is crucial for maximizing returns and minimizing risks. One of the best ways to track stock performance is by utilizing various tools and resources available today. Financial news websites, stock market apps, and brokerage platforms often provide real-time data, performance charts, and alerts for significant price changes. Additionally, services like Yahoo Finance, Google Finance, and Bloomberg can help you stay updated on market trends and company news that may impact your investments. Staying informed about market changes is essential for making timely decisions. Economic indicators, interest rate adjustments, and geopolitical events can all influence stock performance. Subscribing to financial newsletters or following market analysts on social media can provide valuable insights and keep you in the loop. Moreover, regular portfolio reviews are vital for adjusting your investment strategies as needed. Set aside time, perhaps quarterly or biannually, to evaluate your high-yield stocks. Assess their performance, dividend payouts, and any changes in the company's fundamentals. This practice allows you to identify underperforming stocks and make informed decisions about whether to hold, sell, or reinvest. By leveraging the right tools, staying informed, and conducting regular reviews, you can effectively manage your high-yield stock investments and adapt your strategies to align with your financial goals. Happy investing! In today's video, we've explored the exciting world of high-yield stocks and the investment strategies that can help you make the most of them in 2024. We discussed what high-yield stocks are and why they're attractive to investors, highlighting their potential for income generation and the importance of diversification in your portfolio. We also examined current market trends, identified promising high-yield stocks, and shared effective strategies for monitoring and managing your investments. Remember, investing in high-yield stocks can be rewarding, but it's essential to stay informed, conduct thorough research, and regularly review your portfolio to adapt to changing market conditions. By doing so, you can position yourself for success and maximize your returns. If you found this video helpful, please take a moment to subscribe to our channel, like this video, and share it with fellow investors who might benefit from this information. Your support helps us create more valuable content for you. Don't forget to explore our related videos and resources on the channel, where we dive deeper into investment strategies, market analysis, and tips for building a robust portfolio. Thank you for watching, and we look forward to seeing you in our next video. Happy investing!